Here is the next problem, problem number 10. So the following, here's the question. The following is the balance sheet of X Limited as on 31st March 2015. Liabilities, assets. So on the liabilities side, 4,000, 6% preference share of rupees 100 each, 4 lakh, 2,000 equity share of rupees 100 each, rupees 75 paid up, 1,50,000. Next, 6,000 equity share of 100 each, rupees 60 paid up, 3,60,000. 5% debentures, 2 lakhs. Here is the outstanding debenture interest, 10,000. Creditors is 2,90,000. So coming on to the asset side, they have given land and building, planters, nothing but machinery, patents, stock, debtors, cash value, and this is the deficit by 2,40,000. So we will be not considering this and we will not be doing anything with this. So next, coming on with the adjustments. On the date of balance sheet, the company went into liquidation. So on the date of balance sheet is 31st March 2015, the company went into liquidation. The dividends on preference shares are in arrears for 2 years. So there is a arrears of preference dividends for 2 years. How to calculate that? So what is the value of preference share? 4 lakh into what is the percentage of preference dividend? 6%. So 4 lakh into 6%, it is arrears for 2 years. So 48,000 is preference dividend, arrears on preference dividend. Next, the arrears are payable on liquidation as per the article of association. So here we need to pay the arrears of preference dividend also, no need of neglecting that. The debentures have the floating charges on the assets of the company. The debentures have the charges on the assets of the company, so you will be paying them before the secured creditors. Before the unsecured creditors. Next, creditor includes a loan of 1 lakh secured by mortgage of land. So here the credit value of a company is, balance sheet value is 2,90,000. So in this value, so credit value is 2,90,000. So 1 lakh rupees is secured by a mortgage of land. So while giving 1 lakh rupees, they have taken a security. The company has given them a security of land. So even if the company doesn't pay 1 lakh rupees, they can take the land for themselves. So here they are giving 1 lakh rupees as secured creditors. So in 2,90,000, 1 lakh rupees is secured creditors, means remaining will be unsecured creditors of 1,90,000. So next, coming on to the assets realized are as under: land 2,40,000, here it is 2 lakh rupees, it is valued at 2,40,000, plant 4 lakh, patent 60,000, stock 1,20,000, debtors is 1,60,000, and also there is a cash value of 60,000. No, will be not taking this P&L account. Next, the expenses of liquidation amounted to 21,800. This is liquidation expenses. The liquidator is entitled to commission of 3% on all the assets realized, including cash. So first you will be seeing from here. The liquidator is entitled to commission of 3% on all the assets including cash. So as I said in the previous, so if they are given as amount realized, means it is known that you are supposed to take the cash also. But they are given here, they are given as assets realized and also given all the assets realized. If they are given only assets realized, means you will not be taking cash. If question doesn't mention including cash and they give only assets realized, means cash will be excluded. If they give all the assets realized and if they are not mentioned including cash also, you are supposed to take the cash value, right? So next, what all the assets realized is 10,40,000 it will be. So here 2,40,000 plus 4 lakh plus 60,000 plus 1,20,000 plus 1,60,000 plus here is the cash value. So completely it will be 10,40,000. So on that 3% is the asset value of a liquidator's remuneration, that is 31,200. So next, a commission of 2% on the amount distributed to unsecured creditors. So 2% commission is payable on the amount available for unsecured creditors. So what Here the value of unsecured creditors we have calculated. What is the value of unsecured creditors? 1,60,000. So on this 1,60,000 the amount will be, that is 2% commission will be paid. If the amount is sufficient, even if the after paying all the expenses before the unsecured creditors, after paying that also, if the amount is sufficient, means what we will be doing, we will be giving them as 1,60,000 into 2%. If it is not sufficient, means whatever the amount is available multiplied by 2% divided by 100 plus rate of commission, right? So here we are supposed to see, I'll say that later, we are supposed to see is the amount sufficient for the payment of unsecured creditors. And then here they are not given if it is including the preferential creditor. Should the preferential creditor should be taken as unsecured creditors or secured creditors, they are not given. If the preferential creditor should be taken or not taken, it's not given. So if anything is not mentioned, it is said that even the preferential creditor should be treated as unsecured creditors for the purpose of paying remuneration. So now 1,60,000 plus 30,000 will be considered as the amount on this value the remuneration will be paid. So preferential creditors amounted to 30,000. So here is that. So 1,90,000 was the value, and this under that preferential creditor is 30,000. So finally whatever the amount remaining will be the unsecured creditors. So then they'll prepare the liquidator's statement of accounts. So now coming on to the liquidator's final statement of accounts. So I'll be writing on the first we'll be writing on receipt side cash 60,000. So these are all given in the question. Cash is given and all the assets which has been realized is given, and I have written all those things over here. And you might ask that, ma'am, land so land has been taken down by these it is a mortgage for the secured creditors. Why are we writing on the asset side? That is, it will be taken by the sundry creditors. But in the question they have not mentioned they have realized. They have not said that the word called they have realized, the secured creditors have realized. They have not said anything like that. If they have said that they have realized, means it is understood that the secured creditors have taken the land. So we will not be writing in the assets realized also, will not be writing sundry creditors also. But here they have not mentioned anything. So why will be considering here as that one also as an assets realized. So all those things are written on as usual. Sundry creditors will be written because they are not mentioned. They are not taken the land completely. Only what is the value of sundry creditors, that will be written. 1 lakh rupees here we are given, right? One sundry creditors is 1 lakh rupees, not under the secured creditors. Next coming on to liquidation expenses, it is given 21,800. Next coming on to liquidators remuneration, that is 3% on assets realized, we calculated 31,200. So you just wait with the we'll be talking to this later. 2% on the amount payable to unsecured creditors including preferential creditors in this problem. Next we'll be paying for debentures. So question as debentures, outstanding debenture is also there, debenture is also there, that is 10,000 and 2 lakh rupees. So 10,000 worth of interest on debentures and 5% debenture is 2 lakh. Next will be, we should see until year. So here total assets realized is 10,40,000 minus whatever the until year debentures we should take. After paying, see here, 2% on the amount available to unsecured creditors including preferential creditors. Total assets realized is 10,40,000. Amount up to debentures. So here amount up to this debenture is, that will be 3,63,000. So the remaining is 6,77,000. The amount payable for unsecured creditors is 1,60,000 and preferential creditor is 30,000. So here it is sufficiently available. The amount is sufficiently available for the purpose of paying the unsecured creditors and preferential creditors. So at that time it will be simple for calculating the liquidators remuneration, that is 1,60,000, that is unsecured creditors plus 30,000 of preferential creditors, 1,90,000 into 2%, that will be, yes, here written 3,800. So next what we'll be paying, the according to format we have calls in advance. If there is any calls in advance means we should pay. So there is no calls in advance. Next we'll be coming to preference shares, and then there is a preference shares. So in this, 6,77,000 was the value. Even in this 6,77,000 will be minusing 1,60,000 and 30,000 and also this 3,800. So the amount is sufficiently available for the purpose of paying preferential holders. So first we will be paying the arrears of dividends 48,000, preferential capital 4 lakh rupees. So we are supposed to see what is the amount available to this equity share holders. So here it is. So the calculation of amount available to equity shareholders, total receipt is 10,40,000. Total amount payable up to preferential capital is 10,04,800. So this is that is payments that is up to the preference share capital 10,04,800. So amount available for equity shareholders is 35,200. So one more thing you are supposed to understand over here is, so in the question they are said what they are given. So this 2,000 preferential, so each value of each equity share is 100 rupees. One share value is 100 rupees for both types of preference share, even for 2,000, even for 6,000. But what happened, 2,000 preference equity shareholders have paid 75 each. They are paid 75 rupees. 100 was the share value, but they are paid 75 rupees at least. But the 6,000 equity shares of 100 rupees, they are paid 60, right? They are paid 60 only. They are paid 75 rupees, they are paid 60 rupees per share. So they are paid higher value, right? They are paid excess value, right? So why we are supposed to minus the excess amount paid by 2,000 equity share as compared to 6,000 equity shareholders. So 75 rupees each, 75 rupees is paid by 2,000 equity shareholders and 60 rupees is paid by 6,000 equity shareholders per share. So 15 rupees, this 2,000 equity shareholders have paid 15 rupees extra, right, when compared to this 6,000 equity shareholders. So for this 15 we are supposed to pay back first. For this rupees 15 we will be paying back, we will be making them equal. So 2,000 multiplied by 15, 30,000. In this 35,200, first we will be paying the excess whatever they are paid. So 30,000. So remaining value after paying the excess for this 2,000 preference equity shareholders, so remaining value will be divided for both the equity shareholders now. So remaining is 52,000. For now we should see what is the value for, what is the amount available for this 2,000 equity shareholders. So 52,000 is the value available multiplied by how much of equity shares is there. So that is 2,000 plus divided by total number of equity shares 2,000 plus 6,000, 8,000. So 55,200 multiplied by 2,000 divided by 8,000 is 13,000. So 1,300 is the amount payable to 2,000 equity shareholders. So for 6,000 equity shares, 55,200 multiplied by 6,000 divided by 8,000 total equity shares, that is 3,900. As you can see here, so for them 30,000 for excess payment for 15 rupees plus remaining in that 5,200 we paid 13,000, that is 1,300 for them, 1,300 here will be paying, and for 6,000 equity shareholders only 3,900. So it will be tallied here. So hope you have been understood with this. So any doubts please do ask me. Thank you.